All right, it looks like we are live. Good evening to the collective family. I know you all know who I am. I'm Sharon Johnson, the Lady GC. But I'm excited and honored to welcome each of you all to tonight's masterclass. And whether you're joining us live tonight or going to be catching the replay or somewhere in between, we want to thank you for showing up. Thank you for showing up tonight for your own vision. Thank you for showing up tonight for your business. Thank you for showing up tonight for yourself. And thank you for showing up tonight for your legacy, because that's the reason why we are here. Now, before we get started, y'all know how we like to do it over here. We like to get ourselves grounded in the purpose for us being here in the collective. So the collective was created for bold entrepreneurs and generational wealth builders. That's you. That's you. Say, that's me. Say, that's me. And you are here because you are serious about impact and about elevation. This is the place where we will help you develop strategy to take your business in whatever state it is in from where it is now to the destiny of legacy that we know that it's intended for. We don't just dream over here. Like we're going to be over here doing, right? We're going to be actually executing and putting things out in the atmosphere, not just speaking them, but actually putting our action behind them. We are here tonight, and I'm really excited about what we're going to be talking about tonight, because I absolutely think that the person that we have on the stage with us tonight is absolutely amazing. But before I get to introducing her to everybody, I just wanted to remind you all that the collective is here for you. The reason why we are building generational wealth is because there's so many things that are going on in the economy right now, a lot of things that are going on politically and things that are going on just around us in general. And the reason why we're here is because we're seeing that people who don't have more than one income stream are too close to none. If you've just got one, you're too close to none. That basically is what we're saying. And so one of the reasons why we're here is that wherever you are in your business, whether you're just getting off the ground or whether you've been at it for a while, but you haven't been able to seem to get some traction, we're here because we want to see you succeed. We want to see you build wealth. And we want to see you leave a legacy for your children's children. That is what the Bible says. And you all know that we are faith-based over here. We believe in Jesus, and we're going to do the word if it's at all possible and in us. So Terry and I have been working hard to create a lineup of speakers that are here to shift your paradigm and to shift you into your bankable purpose. That's a term that our other coach, LaShawn Holland, used all the time. Everybody is put here in the earth and on the earth with a purpose, with a gift or multiple gifts in some instances, and all of them are aligned with the purpose that we will put here in the earth. And in order for us to be successful, it's important that we find our way at the right time, which God is always on time. He's never late. Sometimes we can delay ourselves because of who we're connected to. Sometimes we can delay ourselves because, or it seems as though we delayed ourselves because we didn't learn a lesson and we repeated a class. Nobody likes repeat classes, right? I didn't like repeating class. Well, actually, I only repeated one in college. Nobody likes to repeat classes, but we also don't want to repeat expensive life lessons that impair us from actually getting to our destiny and the thing that God has called us to. So we are here tonight to help you lift your head high enough to see the possibilities that are around you through your gifting and your bankable purpose, and also to see the possibilities that are within you, because there's not anything that's impossible to someone that believes. So if you are a believer and you know in your knower that the greater one lives on the inside of you, then there's absolutely no reason why you should not be walking in confidence towards the goals and the destiny that God has for your life. So if you are new to the collective, welcome, welcome. If you've been here for a while, welcome to tonight. We are going to continue on our journey towards being legacy builders and being wealthy. And we know that wealth is not measured in money. It's measured in time. How much time do you have to do the things that your heart really beats to do? Think about it. I love construction, and I always have worked in construction pretty much, with the exception of the time where I was teaching. I love construction, but I don't necessarily love doing it for other people. I like doing it for myself. Let's be honest, right? So in my walking towards my purpose, I've had to take some pit stops and learn, and that's all right. It's good to learn from other people. But then there's a time when you want to just step fully into your purpose and have the freedom to pursue the thing that's on the inside of you that your heart really beats to do. And that is the reason why the collective is here for you to assist you with that. The last thing I will say is that another reason for the purpose of the collective is this. And this is something my daughter taught me. It's an African proverb. And it says, if you want to go fast, go alone. But if you want to go far, go together. And so we want to go far here. We don't want to go fast and have those quick wins that are dissolved and it's not repeatable. We want to have repeatable successes because that's the only way that you really know that what you're doing is really working. If you only do it one time and you can't reproduce it, then I would venture to say, you probably got some more learning to do. But that is the reason why we are here. So Terry and I have been working on some additional things that are coming down the pipe, and we're excited about those things, excited about the people that are going to be sharing with us. And so tonight we're going to move forward. I'm going to make 2 more announcements, and then we're just going to get into it because anybody that's ever been in a meeting with me knows I don't like long meetings. I like to get in, say what I gotta say, and let's get out of there, right? So 2 more quick announcements tonight. If you all missed the 30 days, the 30K in 30 days challenge, you really missed something last week. That was really put together to push us to stretch ourselves and to stretch our mindset and to strengthen the way that we move with our money. Because, my coach, LaShawn, always says success leaves clues. And so we brought people to the stage who were successful in business and personal credit, that were successful in creating their own infinite banking system and the like, and people who had done these things and repeated them with a level of success so that now they could teach you how to do it. There are people out there who are doing this every day, and it seems like that's been hidden from our community, but not any longer. Not any longer. And so we just want to invite y'all to come along with us. If you missed that challenge, don't worry. We'll probably be coming up with another one in a few months. But it's imperative that you connect with us here in the collective because I believe that there's a lot of value that we are providing here, and we don't want you to miss out on that. So speaking of that, today is March the 31st, which is the last day of the month of March, the last day of Women's History Month. And you all know that last month and this month we ran the $47 special. After today, the price is going to be increasing to $77 a month. Now, we accidentally left the BOGO up the last time. Not sure if it's still up, but today is absolutely the last day. And we hope, let's just say this, we hope that you all are tapping into that. If you've got friends, got family members, people that you don't want to leave out in the cold as this movement is going on, because listen, there is a shift that's going on in the economy. There's a wealth transfer that's going on, and a lot of people think that in recessions that everybody is just downtrodden. No, not at all. Money is actually a currency and it flows. Now, just because it's flowing through your hands into somebody else's hands doesn't mean it's not flowing, but you need to find a way to be able to capture it when it's flowing through your hands. Billionaires are made in recessions. I'll say that again. Billionaires are made in recessions, and you can be one. It's really that simple. The sons of Issachar discern the times and the seasons. You can look and you can read the tea leaves or whatever it is you want to say. But if you are tapped into what's going on here, there's not any reason why you should miss what is going on and be in position to be able to receive, to capture, to hold, to grow a piece of what's going on in this wealth transfer. So we want to encourage you tonight, sign up. I'll talk to Terry. I don't know how many people are in here. I've got somebody that at the last minute decided that they want to join, but tonight at midnight, pretty much the $47 is going away. We'll be going up to $77, but never fear, because the amount of value that you're going to be receiving is well beyond $77 a month. So that is that. That is all I have on that. Our April master classes are going to be powerful. So stay close to the calendar because we are going to be bringing even more high level strategy and expert guests and people who are walking in excellence. And speaking of excellence, tonight, it is my absolute honor to introduce our guest tonight. Extraordinaire. I'm going to say that. She probably don't want me to say that. So toasty is warming here. Y'all don't pay no attention to how I'm glistening, okay? I'm just being myself tonight. Pamela Harrigan-Young. I'm sorry, I don't know what's going on with me. She is an attorney and CPA, y'all. Y'all talk about brains on fleek, right? She's going to shake her head and be like, no, no, no. Listen, I had 2 degrees, but they both were engineering. I dare not have been an engineer and an attorney. I think I wanted to do it at one point in time, but I think my better sense settled on me and I decided that it wasn't something that I was going to be able to do. But she hails here from Greensboro, North Carolina. She is an alumna of the great, the illustrious North Carolina Agricultural and Technical State University, Aggie Pride. And she is also my soror and a member of Delta Sigma Theta Sorority Incorporated. Those devastating divas, those ladies that's out there getting stuff done. We ain't gonna talk about that right now. So I'm very happy to bring Pam to the stage tonight. She does bring a rare blend of legal and financial and business expertise, and it's all rooted in her commitment to empowering others, right? To give you the knowledge to thrive. One of the reasons that a lot of our businesses don't do well is because we might be talented and gifted in the thing, but we don't know how to operate a business. We don't know how to set up structure. We don't know how to set up systems that set us free to be able to go and work on the business and not in the business. So she is highly credentialed, but also very committed to serving and equipping other people like you, like me. So if you have not gotten your pens, your paper, or whatever it is you're going to use to take notes tonight, pencils, crayons, markers, smoke signals. I don't know what you're going to use to take your notes tonight, but I want to encourage you to get something because we're getting ready to get into it and we're getting ready to get into the meat of all things legal with regard to business. And so she's going to share some things that are going to position you to move smarter, protect your assets, and elevate your business with clarity and confidence. So, collective, let's give our guest attorney Pamela Harrigan-Young a warm collective welcome.
Thank you.
All right. So I did all of that talking. Girl, I did all of that talking, but I do want to thank you again for agreeing to join us tonight. It is really it's I'm honored, that I met you all through your mom when I was being initiated into the sorority. And your mom was absolutely a gem, one of my absolute favorite older sorors that were responsible for bringing us into the bond of the sorority. And her impact with our particular group of intake members I mean, even still today, everybody knows, and everybody loved her. And so we're so grateful that you're with us tonight, and we're grateful for the memory of your mom, who was an amazing, amazing woman.
Thank you. Thank you.
Yes, yes. So we're gonna go ahead and get started because child, I talk a lot.
Okay.
Y'all know I'm not Terry. Y'all never seen me like this before, but this is
Well,
Sharon. Like, okay, this is me
it's all good.
unfettered. So y'all deal with it. So I'm going to give you an opportunity to introduce yourself to the people and to give us a little bit of information about your background and how you got involved with both accounting and law. Because, like I said, a woman whose mind thinks like that is a boss. So I'm going to yield the floor to you and let you go.
Wow. Well, thank you so very much, Sharon. I really appreciate the very kind introduction and all the accolades and for this opportunity to be here and share. I'm so glad to learn about this collective and look forward to being a part of it myself. This is what we need in our community. And I'm so glad that you all had the vision to create this space. And I really appreciate you honoring my mother's memory. For those in the collective that don't know, I just lost my mother to Alzheimer's in January of this year and still adjusting. But I'm trying to carry out her legacy of excellence. And I just appreciate all the kind words that you shared. So I, as Sharon said, am a CPA and an attorney. I graduated from A&T State University, Aggie Pride, in accounting. And so that was my first career, being a CPA. And I went back to law school about 14 years after starting my career. So I was kind of a non-traditional law student, but I went with a specific purpose in mind. And so they really are connected, although it doesn't seem that way. But when I was in undergrad at A&T, I had a really, really good tax professor. And he turned me on to taxes at that time. And I was just like a light came on. And I realized then that that is how people create generational wealth, by saving taxes. That's one of the ways. There are many ways. And so over the years, I began to coin a phrase. I don't know if it's original or not, but tax deductions and knowing tax strategies is a form of sophisticated welfare. So I call it that because it's what the wealthy use to get money from the government by not paying taxes. So, and these are kinds of strategies and information that's not always available in our communities. So I could see it then, but I wasn't quite understanding how going to law school later would benefit me. So once I worked in my career, I realized, oh, okay, I need to get a law degree. Someone advised me to go down this path, and I'm very grateful. It was another soror, and I'm so very grateful to her for telling me to go down this path, which was nowhere in my radar. But I'm so glad I did. When I went to law school, I took it's a traditional path in law school. First year, you have to take a certain number of classes in topics. But that second and third year, you can tailor your degree. And I did. I tailored it to tax and wealth planning.
Mhm.
And so after I finished law school, I worked for a kind of boutique law firm that did taxes and estate planning for high net worth individuals. And I was there for about 5 years. And then I started my own firm. And so I've been in practice. This is my 13th, 14th year, I believe. I started in 2012 and I love it. I get
I
to,
didn't know.
yeah. So I've been in private practice for that long.
Okay.
And I actually, like you said, one job is next to none, is almost none. So I've got three because I have my CPA practice where I prepare tax returns and do tax planning. And then I have my law practice where I do estate planning. So I write wills and trusts and powers of attorney. I
Mhm.
do estate administration when people pass away, transferring their wealth to the next generation, heirs property, which is another topic, elder law, really long term care planning. And then I am licensed to sell insurance because, as you all are learning about being your own bank, and insurance is a very key component to wealth
Yes.
building. And it
Mhm.
is another area that other communities have used for a very long time to use other people's money. So I'll leave it at that. But so I'm
Yeah,
very, very
yeah.
honored to be here, and I'm very thankful for this opportunity to share and also learn from this collective. So thank you for having me.
Absolutely, absolutely. And we are very grateful that you are here. You said something that I think is so important. Like the other communities have been using this for a long time, right? These strategies that have been out there and people have been using it. And, when we pass away, a lot of times it's GoFundMe. And I
Mhm.
understand it in some instances with younger people, you may have had an unexpected, you know. But I mean, honestly, you can get a Gerber policy on a baby
Yes, you can.
15 days after they're born, right? It's 15
Yes,
days, right? And if you want to go beyond that, you can do things like IULs and that kind of stuff that and other whole life type of products that will put you in a position to be able to extract funds from it as they grow to help take care of some of their milestone things so you don't have to go get a second job.
exactly.
So yes, those and again, that kind of goes back to what I said, success leaves clues, right? Somebody is out
Yes.
here doing it.
Mhm.
What are we looking for? What are we looking at? And I think that that's really important.
Mhm.
So I'm going to we're gonna go ahead and get into this because I'm really excited about the things that we're going to be sharing about. So we're gonna be talking about all things legal. So if you had to say that there were two to three things that you see that's most common that entrepreneurs face in terms of tax and legal issues when starting a business. if you had to give me like bullet points on them, what would that be?
Okay. So, when people start a business, they usually are going to pick what type of business they're going to be, whether they're going to be a sole proprietorship, LLC, S corporation, partnership, C corporation, and um, typically they don't know which one they should choose. So that's an issue. Or they get the advice, but it's not comprehensive advice. So somebody tells them what they should be, and they go ahead and just say, okay, well, I'll just create that structure. And it may not be the best structure for them. So that's number one. That's a critical thing. Number two, they don't necessarily set themselves up for proper tax compliance, which can be a big problem. And then number three, there's not really succession planning for figuring out what's going to happen at the end, when I'm ready to get out of this business that I've started. So I would say those are kind of the big three bullet points.
You said entity structuring and then tax compliance and then succession planning. That is actually kind of where I wanted to start. So let's talk about entity structure. So we know that most people have the LLC. You mentioned the LLC, the S Corp, and the C Corp, and then there's the sole proprietorship. What are some of the key factors that a business owner really needs to consider when choosing between the different business entities?
If there were to be a lawsuit, so all of your personal assets are at risk. It depends on what type of business you're starting. So a sole proprietorship could be something to consider. And of course, there are tax implications to being a sole proprietor as well. And we'll talk about that. The LLC structure is very, very common these days, and it's very, very flexible because starting an LLC, now you're talking about going to your Secretary of State and your state of residence and actually registering your business and paying a fee. Application that you have to do to have your business recognized like you would with an LLC or any of the other structures. So you sign up with the Secretary of State, say, I'm either going to be an LLC or I'm going to be a corporation. You have to go, get an EIN number with the IRS, and you have to tell them what you're going to be taxed as. And then there's the partnership entity structure as well. And so you want to think about all those entity structures and the tax implications related to them. And if you are a partnership or a sole proprietorship, you're going to have to pay self-employment taxes through that entity. So that's on top of your regular tax rate that you pay, because all of us, I believe at some point, have been W-2 employees, and we know about FICA and withholding. And basically what happens is with withholding taxes, you pay 7.65% tax to get your Social Security, your Medicaid, et cetera, and your employer pays 7.65%. So you each are paying a half of those taxes that are contributing to Social Security and Medicare. But what happens when you're self-employed is you pay both halves of those. So you're paying 15.3% in self-employment taxes, and that can be significant on top of your regular tax rate based on your other income. So, taxes are very important to consider. With an S corporation and a partnership, those are considered pass-through entities. Those entities themselves file a separate tax return, but they do not pay tax. So they are just a pass-through. So they're an information return, and they generate what's called a Schedule K-1. And that K-1 shows all the income and deductions, et cetera, that will now go on to your Form 1040. And so those can have their advantages. And then the C corporation files its own return, but it is not a pass-through. And so it files its own return, pays its own taxes, and is separate and apart from your individual income taxes. So you want to think about that. Why am I setting this? What are the best tax benefits for me based on the entity structure I choose? And then something I talked about with succession planning, what do I want the end goal for this business to be? So where am I going to want to get out of it? Is this just something I'm trying out? And so I don't want to go through all these formal processes, or do I want this to last beyond me? Do I want to bring in partners? Do I want to bring in other people? Do I want to bring in employees, or is it just going to be me? So many things to think about. The other thing that a lot of people have at top of mind is liability, limiting that liability. And when you are a sole proprietorship and a partnership, you basically have no limited liability. You're at risk of all of your personal assets being exposed to lawsuit. And with a partnership, you're particularly more exposed because you're liable for the actions of your partners as well. So, there are opportunities to set up a partnership where one person is a general partner and the other people are limited partners, but that general partner has it all on the line. They are at risk. So that is, something to consider. The other thing to consider is how you're going to raise capital. So if I need money to start this business, am I going to sell shares of stock? Am I going to fund it myself? Am I going to ask for angel investors? What will those people be looking for? So those are the types of things you want to think about. In addition to, I'll say one more thing, how you're going to transfer interest in this company. So if you want to add people to the company and give them the opportunity for ownership, is it better to have stock so that they can have ownership in this company? Are we envisioning something very large that will go public? And so the general public will be able to purchase shares. So those are the kinds of things to think about, whether you're small or, you have big goals, for a major operation.
Definitely. That's absolutely, you were spot on with that. I know those were some of the things that I really had to consider. And unfortunately, at the time when I set up the business that I have now, I really just kind of leaned into what I already knew, as opposed to, well, actually, I lost my CPA, number one. And then I really didn't have an attorney that I really trusted at that particular time to lean into with that. But yes, those are absolutely definitely very important things to consider. And thank you for going ahead and touching on the pass through taxation, because a lot of people don't realize how that works. They just send their stuff off and just get it done. And as long as they're getting money back at the end, and they don't have to pay a lot, they don't really think about that, or how that affects them. It affects their bottom line tax wise. So beyond the tax considerations, though, so I know that there are legal requirements for starting businesses, but how can we make sure that when we get started setting up our business, that we are in compliance from the beginning, not just with the taxes, but even like with setting up our entities? And I know we're going to kind of talk more from a North Carolina lens, because we're both here in North Carolina. I'm sure that what in you sharing that there's going to be like this thread of commonality that goes for all businesses and just about all states. So how do you see that in terms of compliance, being compliant from the onset?
Well, I definitely want to make sure I mention just one more aspect of taxes, and that's sales taxes if you're going to have a retail business. Because some people have service businesses, some have retail businesses, and when you're selling products, there's always going to be a sales tax implication. And, you need to set that up and make sure you're compliant in every state where you're going to be selling your products. So that's important. But other compliance issues are making sure you're filing with your Secretary of State. That's very important. Like I mentioned, any entity structure you choose other than a sole proprietorship, you need to file with the Secretary of State. And typically, like for North Carolina, you tell them you're going to be an LLC or corporation. They're not going to really ask you, but they you have to tell them whether you're going to be an LLC or a corporation, and then you drill down as to what type of entity with the IRS. Okay, whether that's going to be a partnership, a S corporation, even a nonprofit. So typically, Secretary of State's offices ask you to register your business and pay an annual filing fee. And in North Carolina, it's $200. And so you kind of, just let them know where your business is located, who the the officers are, or the members are, and you just keep that up to date every year. And if you do not, they give you some grace period in filing. But if you're not keeping up with that, you
Mhm.
could be administratively dissolved as
Mhm.
an organization. And that's really critical because if for some reason there were a lawsuit, then if you had set up limited liability structure and then your structure is administratively dissolved by the
Mhm.
Secretary of State,
Mhm.
then you lose that liability protection. So that is an area of compliance that really doesn't have anything to do with taxes, but is very important.
Agreed.
And then another area of compliance that people don't really think of as compliance, but I have to say it, it's accounting. It says
No,
income and
say it.
expenses.
Say it. Say it. It's the truth. Indeed.
I cannot tell you how many people come to me with no formal accounting system, and it is very difficult because like you said, you're starting your business, and if you're not starting your business to be an accountant, that is the last thing you want to do. It's
Mhm.
very time consuming, and it is not what you are gifted or called to do. But you really cannot make your business successful without knowing what money is coming in, what money is going out,
That's
what
right.
cash flow is available for you to be able to make business decisions and investments that you want to make. So, having an accounting system is critical. And even if you're just starting out, even if you're just using Excel, just put all your expenses down
Yeah.
and all your income as it comes in. That's really, really important because, you could have a bunch of receipts, but I tell people, okay, if you're going to have receipts, please copy them on a copy machine or take a picture of them on your phone because receipts fade. And
Yes.
so you might look two weeks later and they look a little faded, but definitely 2 months later, it's like, I can't even see what's on this receipt, what I paid for, or anything like that. When you use software like QuickBooks, which is, the one I use and I recommend, they have an online version and a desktop version. They have an app. So you can be on your phone and you could take a picture of a receipt right then and there. It's
Mhm.
capturing that information because as we're business owners and we're moving around and we're doing things, it's like you don't even remember. I went and bought a ream of paper. I went and brought ink for my printer. And,
Mhm.
I put it on my Walmart receipt with all my groceries. And so now you've got to split out, my
Mhm.
personal versus my business expenses. So, having an accounting system that helps you track those is very, very important. So that compliance is key. I'm always going to go back to taxes because that's my wheelhouse, but I can't forget estimated payments and mileage. And we could talk about that some, but if you are a sole proprietor or an LLC that's being taxed as a disregarded entity, it's going to be critical that you decide, you kind of have a gauge of how much income you're going to be bringing in and how many deductions you're going to be able to take so you can determine how to pay in your taxes because as a sole proprietor or a disregarded entity, you don't get a W 2. So you don't pay taxes as you go along, like the rest of the world who has a W 2 job where they get FICA taxes taken out. You get the privilege of waiting. So you get all this income coming in, but it is not all yours. And so we start to spend it all, and then it's tax time, and it's like, what?
Mhm.
And so now, and that money's gone. And so it's very important to understand. And there are strategies to figure out how much you need to pay in estimated taxes, but just having an understanding that that is something that is necessary. And there are penalties when you underpay.
Yes.
So having those estimated taxes is critical. That's a form of compliance. And then mileage is a form of compliance. When you're in a service business or even a retail business, any type of business, if you're traveling, going back and forth, doing whatever you need to do for business, meeting clients, you need to keep track of your mileage and it needs to be in real time because that's another thing that is gets away from you really, really quickly.
Mhm.
And, there are rules about what mileage is deductible. But one thing that's critical is to use an app if you can, or, a hand hand written mileage log, a little notebook in your car. They have them. They have little sheets online you can download. I use an app called Mile IQ, and it's wonderful. It's you they give you, I think I've used it for years, so I don't know if their terms have changed, but when I first started using it, they would give you the first 40 drives for free. And then
Mhm.
once you go past 40 drives, you need to start paying. But it's really as simple as it you turn it on, it starts when you start your car, and it stops
Mhm.
when you turn it off or park for too long. And it says, "This was a trip. Is it business or personal?" And literally,
Yep.
you swipe one way for business, one way for personal. And you can go back in at the end of the day and type in, I went to X location to see Y and talk about Z related to business.
Mhm.
And that's what you can, it can spit out a report for you every month. But
Yes.
those, I could tell you from personal experience, it is difficult to recreate that mileage after a period of time,
Yes.
and it doesn't take long to forget what you were traveling for.
Yes. Very true.
Those are some of the areas of compliance that come to my mind.
Okay. I used to use TaxBot, and I don't know what
Oh,
happened
yes,
to
yes,
it,
yes.
but I think it became Hurdler.
It did.
Now,
It
so
did.
I've been using a hurdler, and the thing that I like about hurdler is that it's always running in the background. For
Mm.
some reason, when I had tax bot, it would just shut down, I'd get shut out, and then I was struggling with tracking my mileage. But this hurdler runs in the background for me, and when I tell you that it gives me the little notification says you just finished the drive, and I can go ahead and do my swiping, and it also gives me the option because I have a couple of businesses to be able to say what I use this for. Like, I'm a worship leader. So when I'm doing things for the church, if I do like a church trip, I can swipe that over to that. And I'm
Mhm.
doing Christmas stuff during the season where we're doing Christmas trees and stuff like that, and making a bunch of runs. You're gonna see a bunch of runs to Hobby Lobby and a whole bunch of runs to Michael's and stuff like that, and then to specific people's homes. Yeah, and it's been invaluable. Right, really, I've started back using it in the last year, and it's just really made my life so much easier.
I'm so glad you mentioned that because, yes, TaxBot is out there. I'm very aware of that. And they did sell their business to Hurdler. And I just had been using Miley IQ and I haven't switched, but that is one that I would definitely consider.
Yes, yes.
Mm.
I really like that one. It's already like 45 minutes, but we're just gonna keep going because
Okay.
this is good. So we talked about the tax implications, and we talked about beyond the tax implications. What are some of the things that business people can do to make sure that they are in compliance? But one of the things that I think that gets caught up and gets missing, and I found out when I was starting to go for certifications that there was a certain element of things that I was missing. And it was a lot of times we don't do this, but it's operating agreements,
Oh,
bylaws, and other
mhm.
foundational documents that are so important for our businesses. And basically what it does is it puts some teeth to what we filed at the Secretary of State. But can you talk to that just a little bit about the importance of having those foundational documents
Yes,
in
yes,
business?
certainly. So, yes, the operating agreement, even a business plan is critical.
Yes.
And, most people know that if you want to get loans, you really are going to have a business plan. But in terms of, and like you said, applying for other certifications, the bylaws are critical and operating agreements. Basically, when you sign up at the Secretary of State website, you don't really have to have much. It's
No.
just a kind of, just a little, I'm here, I exist, and here's where you can find me. But you really do need to create the operating agreement, even if it's just you, to say, this is how this business will be conducted. Excuse me, this is how I'll be paid. This is, how I will manage if I decide to hire someone. And so you need that kind of information that just shows that you're serious about having a business. And
Yes.
then, bylaws are also important. These will be the rules. Basically, this is the set of guidelines that we are going to follow in this organization. And those are critical because, like you said, it can help you qualify for certain grants or funding certifications if you're trying to obtain them, but it can also help you as you're growing your business. This is the business plan can have a plan for growth, but then the bylaws can say, okay, this is going to be the responsibilities of the officers in this company, and this is how we're going to handle situations if we want to make certain investments in this business, or in certain equipment, or whatever the case may be. You want to have the structures outlined, and they can change. They can change over time. They can be amended and updated, but it's a way of kind of looking at your business and kind of deciding what direction it's going to go every so often, at least once a year, to take a look at them and see if anything needs to be changed or updated as you learn and grow and gain experience in your area.
Yes, it is very true. And I will be honest, I'll confess time. I did not have an operating agreement initially because I was, it was really just me because of being a general contractor. I wasn't hiring employees. I was hiring subcontractors to do the work. In doing that, I didn't really see like the need for it. And then one time I went to go get certified to be a historically underutilized business with the state, and they asked for all of that. And I said, be right back. Listen, I'm transparent.
Just
I'm
a moment.
transparent.
Yes, yes, I know.
At the time, I had just restarted my business and I was coming out of teaching back into construction. I had a full-time job. My daughter was in transitioning into middle school. Life was all over the place. And I was just like, let me go take this general contractor test again and get this license back up and running because I'm never going to I'm never going to let that certification go again. And somebody said, well, you need to consider doing business with the state. And I said, okay, well, I'll consider that, but you need to go get your hub certification. Oh, I'm going to do that. And I'm going down this list and they're asking me for everything, like eye color, my baby first, middle, last name, and an operating agreement. And I was like, okay, I'll be right back with
That's
it.
right. I'll get back with you. Just give me a minute.
Yes, but it caused me to think though more deeply about like my business and how it kind of puts the how to the what. How are you gonna do this? What are your means of operation for that? So it was it was actually a good thing. It was that Paul said that was good that I was afflicted. Like, it was good
Yes.
it was good that they told me no. So it made me grow. So thank you, state of North Carolina.
Yeah.
Gosh, y'all, I can be so silly sometimes. I know y'all don't know this
It's
about
all
me,
good. It makes
but
it interesting. Some of this stuff can be boring. So let's spice it up. This is good.
so, and I don't want the people to think that that because I'm one of the head coaches here that I had it all together. No, I'm here because I was coachable and because I'm teachable and because when I blow it, I'm like, I'll be right back.
That's right.
Right. So no, it's like we're here to all get 1% better every
Exactly.
day. And iron sharpens iron, and so the countenance of his friend, the countenance of his friend. And so we have to have other people to tell us when we're wrong so that we can grow, right?
Right. If
Terry
you
said
think
it
you know
best.
it all,
You
then you're
can't.
not. Yeah, there's no way.
Right. You cannot.
You
And
cannot.
Terry said it best. Iron is the only metal that when left alone it rusts. It
See.
has to have other metal to rub against, other iron to rub against in order to be sharpened. So,
It's
I
beautiful.
take that right there and go on with it. I always want to be one of the I don't want to say dumb because I'm not dumb, but I always wanted to be one of the least knowledgeable people in the room on certain things because that always gives me an opportunity to grow. If I'm the one in the room that always knows what's going on, I'm probably in the
You
wrong
need
room.
to
I
find
might
a
be the
different
right room
space.
for somebody else, but it's the wrong room for me. It's the
That's
wrong
right.
room
That's
for me.
exactly right. And there's a
Yeah.
place for that, but
Yeah.
not when you're trying to grow.
Yes, absolutely. So,
Mhm.
okay, so we're gonna we're gonna kind of try to hit maybe a few more things, maybe about another 20 minutes. So we all know everybody gets in the business because they have a dream, they have a thing, a purpose they feel like they want to do. But let's just be for real. Those of us who are in business enjoy living in the B and I quadrants as business owners and investors, not in the employee and the self-employed quadrants. If you've read Robert Kiyosaki's Rich Dad Poor Dad and Cash Flow Quadrant, know that B and I is where it's at. And there have been some
Mhm.
people who recently said that yes, I get great advantages with taxes in business because I take advantage of the strategies and the loopholes for that. So that's one of the reasons why we're in business, because it allows us to be able to live in a way and have freedom and be able to produce and to become producers and to provide for other people so they'll have a means of being able to provide for their families. But by the same token, it provides us with some things that we can leverage so that we're not drowning in taxes like the people that are in the E quadrant. So in that, so let's talk real quickly about effective like tax strategies and what are some things that business owners can do legally to reduce their taxable income while maintaining their compliance like with tax laws. Like we don't want to be doing nothing fishy. We don't do greasy business over here. We don't do that. But there are strategies and there are things and that you can do to legally reduce your taxable income. So let's talk about it. Because
Yes, that's great. That's the exciting part. The deductions that are available. And of course, the entity structure that you choose, you always go back to that. There are reasons to choose those structures. There are deductions that are available in different entity structures. One of the most common structure people choose is the LLC, the disregarded entity. So let's talk about that because you're taxed as though you're a sole proprietorship, but you have limited liability, unlike a sole proprietorship. So that's one advantage. And there are a lot of deductions available to the traditional self-employed person. One that we just talked about is mileage. That's really important. You can, get a great deal of deductions if you keep track of the mileage. And as you said, I want to make a point here at the beginning. All of these deductions can be traced to a code section in the Internal Revenue Code. So, like you said, we don't just pull something out of the hat and just try it. You need to be sure that it connects to a section of the Internal Revenue Code that says you can do this. Second, I always want to let people know that the price you pay for getting these deductions is documentation. A lot of deductions are fantastic and they are legal. They are in the code. But if you don't have them documented properly, if you are audited, you will not get the deduction. Even if it were legal, if you don't have the proper documentation. So the price you pay to get these deductions is you've got to document it. And so thus the mileage log, and you've got to document it the way they say to document it. So then there's another really popular one, the home office deduction.
Yes.
And that's really critical since COVID, because a lot of people are working from home now. And so that is really important. You can deduct, there are two ways you can deduct home office expenses. One is a safe harbor rule, where you get a certain percentage of the square footage. So say your square footage is 300 square feet, and I think it's 5%. And so the maximum deduction is like $1,500. So that's a safe harbor where you don't have to have a whole lot of documentation. That's just, this is the amount of my square footage and multiply it times 5, and up to 300 square feet, I can get a maximum of $1,500 deduction. Now, the more lucrative home office deduction is one where you say, okay, the square footage of my office is 300 square feet. My whole house is 2,400 square feet. So whatever that percentage is, I get that percentage of all of these expenses, which would be my mortgage interest, my property taxes. If you don't own your home, your rent, homeowners association dues, security system on your home, utilities, repairs, lawn care services, trash removal. Did I say pest control? So
No.
all of pest control. So, yes. So all of the things that you normally take care of in your house, you get to deduct a percentage of those things. But again, documentation. So you have to know, how much do I pay in utilities each year? How much do I pay in pest control, security, internet, telephone, all those kinds of things. So you get a percentage. So if you don't want to take the shortcut of the safe harbor, then you're going to have to keep track of all that. Now, the other key to a home office deduction is you've got to have exclusive use of that space. It cannot be used for anything else. And it needs to be your principal business location. Now, it doesn't mean you can't go and do other things, but this is where you conduct your administrative activities. Okay. So you don't have an office somewhere else. This is where you do all of your accounting and you're keeping track of your next client and your next project. And then it has to be regular use. So it's like, 5 days a week, a certain period of time every day. Not, oh, I'm working this month and then next month I'm not working. So it has to be, those conditions have to be met. So that's one that people know very well. There is also something called the qualified business income deduction, where you're
Okay.
getting like 20% of your business income. But you really need to talk to a tax consultant about that. But this is one that may expire if the tax laws aren't changed by the end of this year. But
Okay.
a lot of businesses have been getting 20% of their business income as a deduction.
Wow.
It's certain types of businesses are not allowed to get this deduction. Those are called specified service trader businesses.
Okay.
Unfortunately, that would be the type of businesses I have: law, accounting, health, actuarial services, even professional athletes. But there are ways around those restrictions.
Mm-hmm.
So that's something to consider depending on the type of entity you have, whether or not you're being able to take advantage of that qualified business income deduction.
Okay.
Another one that people may have heard of is, and I think you and I talked about this, making your business trips or your vacations, kind of tacking them onto a business trip so that you can make them deductible. And
Mm-hmm.
here's the key to that, because everything is so technical and you have to follow the code. But
Yes.
the overall thing you want to think about is when you decide you want to take a trip, then you want to make sure before you take that trip, you have created some business purpose. And the key is before you take the trip. So, people are saying, oh, I heard I could, I'm going to France and I'm going to, talk to this person on the plane about my business and then I'm going to make it a business trip. No, no.
Oh,
So you What's that? So you can't turn it into a business trip. It has to be a business trip from the beginning. And so then, so you could go meet someone in France to say, I'm going to talk about whatever my business is. And I've set up an appointment. It's been on my calendar because, again, like I said, documentation. So you've got to think about being audited.
yes.
And as long as you've got the documentation, it doesn't matter if they come audit you because it's on my calendar that I had this scheduled. I have emails between me and the person that are dated before this trip was scheduled.
Mm-hmm.
So, and then, depending on, the timing and how much you tack on, you can have vacation time there and all of it will be considered a business expense.
Mm-hmm.
So that is truly the key. There are more, technicalities to it, but
Of
the
course.
key is you have to have a business purpose before you take the trip. You cannot turn it into a business purpose. And even if you go and you're like, oh my gosh, I met this person, we connected, we're going to go into business together, or they're going to become a client. No,
No.
not unless it was in place before you went. So that's key. And then I'll move quickly because I know where time is going by fast.
I know
But
this.
one thing that businesses can do, especially the self-employed and disregarded entities, can hire your children.
Oh, yeah.
And that is a key thing that other communities do that we do not, because children are what? Expensive.
Expensive.
They wear clothes and they
Okay.
eat food and they participate in sports, recreational activities, and arts and crafts, and all these kinds of activities that cost money for costumes and shoes and equipment and instruments and lessons. And we pay for those out of pocket. But what other communities do are they hire their children, they pay them, they get a deduction, and then the children pay for their own stuff.
Mm-hmm.
And so now you just deducted the expenses that you would normally not get any kind of deduction for. And so, I have one client whose father was a dentist, and she said he had her work in his dentistry practice and paid her enough for her to buy a car, and she bought her own car. So, but the key to hiring your children is they have to be at least 7 years old. So they can be pretty young, and they have to have a reasonable job for their age. So you can't have them reading contracts and they're 7 years old, but you can have them stapling things, shredding things. You can have them cleaning up the office, sweeping it out, emptying the trash, all kinds of making copies for you there. And you want to have a job description, and you want to keep track of when they are working. And then you have to pay them a reasonable salary. So you can't pay them $100 an hour to make copies because you're paying for their private school. But here's the thing. A lot of people hire their children and pay them up to the standard deduction. So this year, I think the standard deduction for a single person is $15,000. So usually they'll stop at that. It's like, my child can earn $15,000 this year because then they won't owe any taxes. And then to the extent that you pay them more than that, which you're perfectly, it's your prerogative, you can certainly pay them more than that. But that's usually the guideline that people are thinking about. What is the standard deduction? So my child's going to file taxes, and then they're going to get their standard deduction, and they're not going to owe anything. And then depending on the entity structure, you may or may not have to pay FICA taxes on those, on the children. So that's another thing to think about. And then, not as common, but really, really important, and these things are starting to go away too, the Section 179 deduction and bonus depreciation. So Section 179, those are two different, that's a code section. And it allows you to deduct certain business expenses because depreciation is something, it's a concept that allows you to deduct an expense without outlaying cash. So people love depreciation deductions because basically it's the wear and tear on the equipment or whatever it is that I'm using. Real property, personal property. And so I'm not really spending any money, but I'm getting a deduction because this item is wearing out the more I use it. So there are depreciation schedules, depending on what type of equipment it is. You could depreciate it over 3 years, 5 years, 7 years, et cetera, et cetera. And so businesses, this is an incentive for businesses to make investments. So a business can actually deduct up to $1.2 million of certain qualified equipment if you're purchasing that. And you can use the Section 179 deduction. And what that's doing is it's allowing you to accelerate the depreciation. So instead of depreciating it over 15 years or 27 and a half years, you get to take it all right now. And then the bonus depreciation, and I'm speeding through this, there's a lot. Like I said, all of these require some technical analysis. So don't just go out there and say, oh, I'm going to take the 179 deduction. No, but these deductions are available. And with bonus depreciation, that is allowing you to deduct, like, this is used very often on vehicles. If you want to purchase a vehicle in your business, or if you have a fleet of vehicles, they have to meet certain qualifications, but you can deduct 60% of the purchase price of the vehicle in the first year you buy the vehicle. And you don't have to have paid for the whole vehicle. You could get a loan. This is not something, not a deduction based on the fact that I paid for the whole vehicle. Is it, however you purchased it, if it meets the qualifications, because it's a qualified vehicle, has to have a certain weight, depending on what type of vehicle it is. And it does not have to be new. It's just new to you. So these are significant deductions that you can get. And one of the strategies that a lot of business owners use is, and it has to be used 100% for business. So what they do is they will, in December, go and look for a car. Okay, so let's say I go look for a car on December 30th. and I get this car, this vehicle, this qualified vehicle, excuse me. So it has to be a certain type of vehicle. And I won't go into all of that because we'll be here for too long. I buy this qualified vehicle and I drive it the 30th and the 31st only for business. And then I get the deduction of 100% business use for that year. And now you have to the next year, if you're going to take any additional deductions, because you haven't taken the full 100%, you've only taken 60, it's going to be based on business use. So if it's not 100% business use, you're not going to get 100%. But for that year, you just got 60% of the purchase price at 100% deducted for a vehicle you purchased for business, just because you bought it in December and you used it. Because a lot of people don't use a vehicle 100% for business. But that's a little trick. It's like I used it 100%, even though I drove it 2 days in that year. But those 2 days, it was 100%. So these are the strategies that people use, they employ. There are others, but those are some of the main ones that come to mind that I think people could really take advantage of.
Okay. Well, that one right there, the last one you were talking about, now I fully understand why people go and buy a pickup truck on December 30th. Yes. Okay. All right. Then looks like we
And the
have a lot of
construction business, you see it all the time. That's exactly what they're doing.
truly love it. Oh my goodness. Like it's just so much more information like that we could just delve into and just roll around in, because this just the richness of the tax code and how it is set up for the business owner and the investor, and how that allows you to keep your money even if you too. I remember when I was married, I was the business owner and my husband at the time was working and he was making all of this money and he was like sweating. And then we go get our taxes done and he'd be like, and I said, I told you those deductions that we had, and we had an excellent. Honey Nelson Davis was our
Oh,
accountant, and she was, listen, the IRS did not want to fool with her. They did not. She was staying flat footed with them and go
all
toe to
right.
toe and win. She was that
Okay.
girl. She really was. And she's no longer, unfortunately, she's no longer with us. But,
Oh,
having a tax preparer and somebody that was so well versed, she really kept us in a really good place. And it kept, you paying 8, 9, $10,000 a year in taxes, and you getting back maybe about 70 or 80% of that, because your wife has a business and she's capitalizing on all this mileage and et cetera, et cetera. And I was doing construction for people in Summerfield. Like that, you live in Summerfield, that ain't nowhere near the heart of Greensboro. I mean, it's
that's right.
contiguous to it, but it ain't. That's a 5 minute drive just to
That's
get.
right. That's in right, in Greensboro, but still
Exactly.
exactly almost an hour away. Yes.
It seems like
Yes.
it, right? It really did. And then if you're going out there every day, multiple times a day, making trips, because it never turns out the way you want to. You always got to go to Lowe's, always got to go to Home Depot, you always got to go pick up something else. And we put so many miles on that RAM, along with other things that we were able to deduct, like our giving and all of that kind of stuff. And so we were always in a really good position when it came to tax time. And so there's so much more to this. I really wish that we had time to talk about more. And really, probably what we'll do is maybe Terry and I'll talk about bringing you back and kind of like maybe doing a round table with you and a couple other people, because
Mhm.
there's just so much information that can be extracted from like your years of experience. And then, it's going to be interesting to see too, how are we going to be shifting strategy based on what's going on now with the tax code be changing, you know,
Yes.
a lot of stuff is changing now, and it is just going to require us to be on our P's and Q's and stay on our toes so we can make sure that we are getting the biggest advantage out of the tax code and protecting our businesses at the same time. But when things change, you have to change with it.
Exactly.
You have to change with it. So yes, yes, ma'am. That was good to me. So let's see. We kind of talked about tax deductions and that kind of stuff. So everybody kind of knows that tax deductions. Well, I don't know. Everybody may not know. Tax
Mm.
deductions and tax credits, y'all. They're not the same thing.
No,
Deductions are nice, but credits
are
are real
better.
with that credits go against what your bottom line, like after your deductions, right? And I don't necessarily know of a lot of tax credits for business owners. Are there any like off the top of your head that? that you could think
Yeah.
of?
Well, the solar credits, the electronic vehicle credits, those are some of them. The energy efficient credits, I think those are expiring. But those are the kinds of credits. There were the energy efficient appliances, the solar and electronic vehicle credits are there. And of course, like you were saying, tax deductions are only benefiting you to the dollar amount based on your um, tax rate. So let's say you get $100 deduction, but your marginal tax rate is 25%. That's really only $25 of tax savings on that $100 deduction. But if you have a $100 credit, it's going to reduce your taxes by $100, not by 25. So yes, credits are better, but they are also hard to come by.
Yes, they are. Very much so. I know when I was working with the housing authority, one of the things that they were doing was that they were using new market tax credits to entice investors to invest in the work that they were doing. And the beautiful thing about that was I don't know everything about new market tax credits, but those tax credits were like over a certain amount of time and they were coming off of their bottom line. So you imagine you got a multi-million dollar business and you're spending multiple millions of dollars a year and bringing in all this revenue, then you get like a $10 million tax credit that you can deduct over 5 years, and you can take $2 million a year. That's significant because you're taking it off your bottom line.
Sophisticated welfare.
It is
Mhm.
sophisticated. Well,
Now, so and depending on your entity structure and the, size of your business, like you said, you're getting $10 million credits, so you're a significant size. There's research and development credits, R&D credits,
R&D credits, yeah.
and those have been around and likely won't go anywhere. But those are for the larger C corporations. But there are credits out there. But like I said, they're hard to come by. And isn't that interesting that those kinds of major credits are available for the larger organizations? Where are the credits for the smaller
Yeah.
businesses?
Mm-hmm.
So
Yeah,
just think about that.
yeah. Yeah. That's why it's so important for us to just continue to educate ourselves and to come into rooms with people who have this knowledge because, our people perish for lack of knowledge. I'm gonna be honest
Yes.
with you. I don't like being I'm working a full-time job as right now because I needed to get my daughter across the line and get her into college. But to be honest with you, like all the advantages are in the B&I quadrants. That's where the money is made, the money is saved, the money is grown, it's protected. And over in E and S, that's just where the money just run through your hands.
It does.
It
You're
just
right.
comes out the other side
And not only that, you can't really leave a legacy because you are the business.
because you are the
So
business.
if you are not able to work, you are not able to eat
That's right. That's
and
right.
pay your bills. So if you can kind of create it where the business runs without you, then you are really running a business.
You're really running business systemization and that sets you free. Absolutely. But you hit on something just now. You were saying that, if you're working, if you're not working and the business is not, then the business is not working. But like you mentioned earlier about succession, right? And having a succession plan and an exit strategy. Now, I know that my daughter doesn't want to be a general contractor. I know she doesn't. I get that because she's studying law. So,
Yay.
but she does want to be a real estate investor, though. She does want to be a real estate investor. So, there's some things for me to consider there as I am continuing to build what I'm going to do with regard to selling and transference of ownership, and the legal and tax implications for doing that. So, to kind of round this off, Pam, if you don't mind, can you kind of touch on high level some things that small business owners need to be considering if they are planning for tax, if they're trying to do succession planning and they need to look at the tax implications as well as the business implications for that.
So, none of us really think about when we start these businesses how we're going to end them, close them down, wind them up, pass them on. And especially when we're, in service businesses or businesses where our expertise is really critical. And so, that succession planning really is about sitting still and saying, what do I want? Like you said, who wants this business and who doesn't? And it may not be your daughter or your child, but it might be another relative or it may not be a relative. Maybe there is someone that you can train to take over because mentorship is key. And that's another thing, that we need more in our community. Because
100%.
we talked about, you and I, offline, how you can have all this technical knowledge and these fancy degrees, but if you don't have a mentor, some things are just learned by experience.
Mm.
And so you're going to have a more difficult time if no one is willing to kind of guide you. So, and in these areas where there are not a lot of African Americans, much less African American women, we have to find a way to carry out our legacy, even if it's not with our own blood, flesh and blood.
Yes.
So that's something to think about, like who, if anyone. And then there are, estate documents you can put into place to say, I'm going to leave this person something in my will or via trust. I'm going to set this up so that it lasts beyond me. Maybe that's when you change the entity structure and make it a C corporation, because C corporations don't die with you
Mm.
like the other entity structures do.
Mhm.
They
Mhm.
continue on without you. So that's what you want to think about. Do I want to sell this business to someone? And then, if so, I need to set this up now so that it will be valuable. There will be value in this company other than myself for
Mhm.
someone else to take. If it's a list of clients or projects or grants, like you said, or if you're going to be a consultant to people, because now you're tired of being in the trenches and you're like, I have a lot of experience and I'm going to be a consultant. But having a way to think about how am I going to pass this along and who you're going to give it to or what method you're going to use to pass it along via sale or bringing someone in to take over, that will determine maybe what type of entity structure. And I just want to say, in closing, when we make these decisions, our businesses are fluid. So you don't just set it and forget it. It's
Mm.
like I might have decided to start off as a sole proprietor, and then I wanted to be an LLC. And then maybe I made enough money to now find it necessary to be an S corporation. And now maybe situations have changed, like maybe tax laws have changed, and now C corporations are taxed at much lower rates. So that's the hot entity to be
Mhm.
if it makes sense for my business. Well, that also makes sense when you're trying to figure out how to unwind your business. And so you might need to change the entity structure so that you can unwind it in a way where you're not hit with a whole bunch of taxes if you sell it.
Right.
And so some of these things need to be planned in advance, sometimes 5 years in advance, 10 years in advance. It depends on what type of exit strategy you want to employ. But you do want to think about these things ahead of time, because if you go sit down and they say, well, in order for you to not owe, hundreds of thousands of dollars in taxes, you need to change this structure and work for another 5 years. Well, that's not what I had in mind.
Mm-mm.
But had I been thinking about this 5 years ago, I'd already know that and I'd be ready. When I'm ready, I can say, I'm out.
That's right. That's right.
So those are things to think about.
It reminds me of the scripture that says, "In the multitude of counselors, there's safety." There's
Safety.
definitely a benefit to building your team and having, the tax person, the to having the, maybe having more than one accountant, because you got to have different types of accountants for different types of industries. I know I'm learning here at my full time job that we've got great people that are great with accounting. Real estate accounting is different. It's just something very different.
Construction accounting is
Yeah,
different. Yes.
construction and accounting is different as
Mhm,
well, right? And
mhm.
so we've got regular real estate assets that we're holding, but we also have new construction of a $25 million new market tax credit, 50,000 square foot office that's going up. And that's a completely different type of accounting that needs to go on for that. And so I'm, never too old to learn, because I
No,
believe in
never.
that. But definitely looking at the succession plan, and you really can't run up on it and be like, I'm ready to go. I think now I want to wrap this up. No, but you should have started winding that up about 5 years ago. So with that, with that being said, one thing that my wonderfully beloved pastor used to say, Pastor Otis Lockett,
Mhm,
senior, he was my pastor all while I was in
mhm,
college. That man was amazing. He said two things to me that really struck me. One was I was working building a property for him on my birthday. And he said, "What you doing today?" And I said, "I'm about to go over to your property and check on it. Then I'm going to leave and celebrate my birthday." He said, "What, the day your birthday?" "My brother's birthday is the day." I said, "Yeah, I know. We're birthday twins." And he said, "You know what, Miss Sharon? If you got to be there at your business in order to make it run, you ain't in business."
That's right.
I said, "That's wasn't what I wanted to hear on my birthday.
I
I wanted
know.
to hear happy birthday. Thank you. Let me shoot you $20 so you can go have lunch." But no, he just shot me the truth, right? He shot me the truth. He said that to me. And another thing that he said that was so profound, he always talked about his definition of success. And for us, it was, success was knowing God, what he desires for our lives, going to our maximum potential, and sowing seeds that benefit others. But the one thing that he said about success, and that was his definition of success, but he said, "Are you really successful if you don't have a successor?"
Okay. Could drop the mic on that. So he gave you a gift. It just wasn't the birthday gift you wanted.
It wasn't wrapped up the way I wanted it.
No, no, no. It's paying long-term dividends, though.
It is. And so it really does. It makes me think about, the goals and the things that I have for the next 10 years. Because I'm getting ready to accelerate some things and scale some things. And in doing that, I'm going to be, rapid fire, needing to put some things together and look at things differently. And so our talk tonight really has brought some things into focus for me beyond just setting up, what I'm going to do for the rest of this year, what I'm going to do for next year, what my financial goals are, it really made me think, like, if I'm able to, well, not when I'm able to, because I am able, because I can do all things through Christ that strengthens me. But when I get to the point where I have grown things in my business and my assets to the point that I've scaled them, I'm going to be working in my mind on, scale, maybe another scale for retirement, but then also how am I going to position these so that they can be passed along? And we didn't get a chance to really talk about trust and stuff like that. And it's already almost 7:30. Like
Yeah. So that's
we've
a
been
whole
going
other
for it. So
topic.
they got
That's
a
a whole
lot of
other
content
topic.
to cut down. But it's just so much to talk about. So this is really giving me something to gnaw on. And I see in the chat that Bernae said that this was awesome. And
Oh,
Sharice,
thank
hello,
you.
hello. So good to see you
Yeah.
in the chat.
Haven't seen the
And
chat.
hopefully
Okay.
others, they are able. Yep, yep. And so hopefully when others are able to see this, because normally we do have. All right, Jamal, thank you for chiming in. Thank you, thank you. That it will bring the same value to them, and then we can expand the conversation going forward, because
Mhm.
these are the conversations that we need to have in our community. We can have some
Yes.
other conversations that we need to have in our community as well. But I feel like we are in a very interesting position in this particular time. Everybody else feel like the world is falling apart around them. And then our community is somewhere talking about, "Where my fans at?" I don't care about your fans right now. You need to get your fan me in the collective and figure out how you can get in
Mhm,
position
mhm,
so that when this
mhm.
wealth transfer is going
Happens.
on and in full swing, that you're not on the outside looking in holding fiat currency when everything has switched to something different. We're looking at the things that are going on with crypto and digital currencies and all of those types of things. And there are other asset classes that we don't really take advantage of because we're just sitting around thinking with
We're
tunnel vision
distracted.
for one thing, and we're
We're
distracted.
distracted.
It's
We're
distracted with our
distracted.
phones, distracted with who
Mhm,
said what Sexy
mhm,
Red did, and all of
mhm.
that foolishness. And really, nobody else is thinking about that. Other
No.
communities, they don't watch television like we do.
Mm-mm, mm-mm,
They do
mm-mm.
not watch TV like we do. And I have a television in my office and at home, and I very rarely turn it on.
Mm,
But this
mm.
little demon right here,
Yes. Oh,
this
yeah.
thing right here is portable distraction.
Yes, it is.
And we've
Yes, it
got to
is.
condition and train ourselves not to be distracted. If you want to get in on what's going on, this is a very powerful tool. If you're trading options, it's a powerful tool. If you're trading forex, it's a powerful tool. If you're buying crypto, it's a powerful tool. If you're learning something, if you're listening to a book, like I don't even listen to music in my car anymore, and everybody knows
Audible.
that I am a yes. And I used to spend an hour in the car on the way back and forth to work every day when I was younger. I'd be listening to my praise and worship music. I'd be learning that, get to church and know all three parts and the lead. But now I did. I did.
Mhm.
And I eventually ascended to a point where I was training because I was doing that. And I'm not saying that there's no value in it, because there is, because I believe that whatever you do for God is, you got to do it with all your might, your heart, your mind, and your soul, and that it will count for all eternity. And any time that you spend with Him will not go unrewarded. That's another Lockettism. That's another thing.
Right.
So
I
when you
love
say,
it.
Sharon, no time spent with the
I
Lord
love it.
goes unrewarded. I'm sorry, Sharita, I didn't mean that. You said the sermon this Sunday was about not getting distracted. That's right. We live distracted lives with everything. I can't even get distracted with the good stuff. My daughter has some great stuff going on in her life right now, and I'm excited for her, but I can't let it distract me. I can't let it distract me. And you can't let yourself be distracted. No. So with that, y'all, I listen. If I don't stop talking now, I'm gonna keep talking. So what I'm gonna do is give you any last words that you have, Pam, to share with the people.
Well, I just really appreciate the opportunity to be here. I just love that this space exists. And Sharon, you are just an inspiration. I'm so proud of you, and I'm so humbled and thankful that you reached out to me and asked me to share. I'm just very grateful. And we can do this. We can take advantage of these strategies, and that was what inspired me way back when I was at A&T all those many years ago, that when a light goes on, that's God speaking to you and telling you this is the direction that He's trying to highlight for you, a path for you to follow.
Mhm.
And so, no matter how challenging the road gets, stay on the path.
Stay on the path.
And, we could take little steps at a time. What I talk about with taxes and trying to get all this stuff wrapped around your head, if you can do one thing, just get a mileage app. Just take one, that's all, just do one thing. You don't have to do it all, because it's like, my head is going to explode. This is too much. But if you can do one thing, and then you're one step closer.
That's right. You want
And
to
then
get one.
after you've got that mastered, you can do another thing. And sometimes you're like, oh, I'm good today. I can do 3 things. Okay, well then go ahead with your bad self. But don't let yourself get overwhelmed. Just do what you can and keep moving. Keep trying.
That's right.
Keep pressing on towards the mark
That's the
of the
one.
prize of the high calling of God, which is in Christ Jesus.
That is correct.
And
That
that is where I will leave it.
That is where you gonna leave it. Well, good people, I wanted to drop y'all a link for Hurdler, because that's the one that I use and I love it. It is really easy. So just give me a second. I'm waiting for it to come through. And once it comes through, I will be more than happy to drop that in the chat for you all. And then also to let you all know that something else that I have that I'm going to be pulling together for you all is a list of the business deductions and ways that you can save on your taxes. And then we're going to be providing that in the collective as well as one of the tools. So you get rewarded for showing up. It's a good thing. It's a good thing when you show up. And so I believe that, you should be rewarded, and there should be some bonus and some benefit for doing that. So kudos to everyone in the chat tonight for coming out, for showing up, and for investing in yourself. I told you all last week, we invest in 4 things. We invest in God and our relationship with Him. We invest in ourselves. We invest in others, and we invest in things. Brene said, where can we follow or get in touch with Miss Pamela?
Okay, let me put my email in the chat. I'm not seeing the chat, but I think I can chat. So I'm going to give you I'm going to give you my email addresses. As you know, I told you I got 3 jobs, Mon. So I have I have a law email address and a CPA email address, and they're very similar. So there we go. I don't know if you can see them. Because like I said, I think I'm on a.
Let's see.
Did I put them in there?
See, I think you may have
Oh,
put
you know what? Maybe it's the chat I'm doing with you.
Yes, you just put
Okay,
them
let
in the
me.
chat with me.
But it
Yes. Can you
says
put them?
send
Can
to
you see the studio
everyone.
chat?
I'm
If you go up
trying.
to the top and click, you can put it in the studio chat.
Okay, let's see if I can. It says message everyone. Let me try. Okay, here's the chat. Okay, let's see, because it says message everyone. So I'm going to see if this will work. No, it's still just coming to you.
Okay, hold on just a second. Let me see if I can assist with that. Let's see, studio chat.
Because I can't see the studio chat.
And do you see live stream chat?
No, I cannot.
Pamela
PH. law.com and then Pamela at phycpa.com.
All right.
Try either one of those.
PHY.
Aha! I think I
Found
finally
it?
got it. Lord have mercy. Technically challenged.
It's okay.
You did
I
it.
judge the brilliance of a fish by its capacity to climb a tree. Everybody has different skills.
There we go. Yay. Okay.
And
So I had to press the arrow to the left
okay.
the caret to the left to get out of the chat between you and me. So at the top I had to, and now I can see the live stream chat. So now it may be in there several times,
And
but
let me see if this goes in here. Paste, trying to paste the hyperlink. So it's not coming up. The hyperlink that I'm trying to paste in here, guys, it's
for
not drawing.
hurdler.
Wait, here it is. Wait,
Yeah.
did I do it? No. Let me see.
Sharice, you're funny. I see you. Something came in.
Something did come in, but I don't think that it's the right thing.
I don't either. Let's see. It's very long.
No, don't click on that one, you guys.
Okay.
Goodness. I'm not technically challenged per se, but don't let me see if I can delete that. Do not take this. No, I can't delete it. But don't pay any attention to that. I will put the actual hurdler link. Let me try one more time. It showed there it is, still not showing up.
Yeah, it's showing
Oh,
up
that's
with
the
a
wrong
banner.
one
As
showing
a
up.
banner. It's showing up as a banner.
Okay. All right then. All right, guys. So you all have my promise. I'm going to take this and drop this over in the let me see, hurdler link. It is over in all right, over in the a post over in the collective. Okay. All right. So it's going to be over in the collective for everybody. I'm going to just say that it's the mileage app. And then that way it's taking it. I'm not sure. It might be the internet over here because right now, with us having had the storm, it's kind of taking its time.
And it might be blocking certain things.
Yeah. Yeah. So you guys have you all have my word that I'm going to make sure that this gets in tonight.
Sharice posted it. Do you see?
Yes.
Is that what you were thinking? But you're going to post it in the collective.
Yes, I'm gonna post it in the collective because I think this is my referral for it.
Yes. Okay. So you could get your referral. Yes,
Well,
yes,
not
yes.
just so I could get my referral, but I think that I'm not sure if this is one where you also get something as well. So
Okay.
yeah.
Yeah. So you want to do it through the link that you send.
Yeah.
But you can use that one just to get information. But it is good. Hurdler is a good mileage app, most definitely.
All right, it's in there, guys. All right, and so the list of deductions that is going to be coming, I'm going to go put my hands on that, and you guys will have that have that posted by tomorrow. But again, I want to thank you, Pam, for your knowledge tonight. Y'all forgive us for our technical difficulties when it came to us using this, but we got it done, right? Thank you all for showing up again for yourselves tonight and for showing up for your legacy, for the people that are coming behind you, because they need for you to show them the way, right? They need to follow you the way that as you are following someone else who is showing you the way. And remember that success leaves clues, y'all. And if you all want to be successful, you've got to change your circle and you need to get around people who are doing the things that you want to do. Nobody listens to a broke man. So there it is. And with that, I'm going to say good night.
Good night. Thank you.
All right, I'm going to stop the recording.